and Sean Callow, senior currency strategist at Westpac Banking Corp, joined us from Sydney this morning. How concerned are you about Europe now after this Spanish auction really disappointed the market, Sean?
Yeah, it's definitely a little more so. We've taken a bit of a break from the fixation with the debt markets and Greece in particular. But Spain was always bubbling away, and I think since those outward revisions to their deficit forecasts and the struggles they've had with the budget, that we're starting to see some traction there. So yields on the 10-year are starting to break up to some levels that are getting concerning. So it's not quite panic mode, but it's definitely a case to be very wary about the euro.
And Sean, what is Westpac's view on how Europe is going to turn out? Are we going to see contagion? Are we going to see another bailout package doled out at some point?
Yes, I think those are sort of a longer-term issues as far as whether there's a bailout for somebody like Spain. I don't think they've got the money for Spain really right now. I think that the next focus is we do expect another rate cut from the ECB. So obviously, while they were on hold last night, the economy we think will disappoint in coming months. We've already seen some signs from that in the March PMIs, and so further disappointment ahead. Sluggish growth in the ECB, which at the moment is just sitting on its hands and sort of congratulating itself for what a great job it's done. We think that they will have to cut rates in coming months, and they may well have to return to the secondary market and buy bonds as well, where they've been very quiet lately.
Okay, well, you sound really bearish on Europe, Sean. I mean, if Spain needs a bailout package, that's a massive economy. And I got to say, that sounds pretty scary. So why is the euro trading at 131 then? Shouldn't it be, I guess, closer to par with the U.S. dollar?
That is a sort of a longer term issue, and who knows, maybe Spain does have some time on its side at this point. So certainly it's not our base case that there would be a bailout at this year or anytime soon. So I think that the euro for the time being though is we must say has held up pretty well. Just that cooling phase over the past few weeks on the debt crisis has been very helpful. So I think the euro near term is probably going to be more driven by the outlook for US interest rates. So whether we get a sharp move in the euro lower, I think will probably depend whether the US dollar can actually build some sustainable strength.
Okay, well, let's talk about the U.S. dollar, and I guess that's predicated on how well the U.S. economy is doing. We're going to get those non-farm payrolls due out on Friday when the market's closed, by the way, so you only have futures trading. How strange is that? What are you expecting for the non-farm payrolls? Am I seeing this right? Westpac expecting a bit of a disappointment?
Yeah, a little bit. We're looking for 180,000, which is still not a bad number, but compared to the market, which is above 200,000, and that's only the second time that they've been above 200,000 for consensus since 2006, if you exclude the census impact of 2010. So the market is priced for a very good number. If they're right, then it would be a real positive. But we do think there are risks. Particularly, we think some of the recent numbers have been buoyed by the unusually mild winter. So I think some disappointment there. So it's very big for markets. As you say, it doesn't help that the stock market is closed and you've only got futures and bonds trading. So a lot of volatility, a lot of event risk.
Okay, so what's going to be the reaction in the currency markets then, if that's the case? If we do get a miss on the non-farm payrolls, does that mean more dollar weakness?
Yeah, look, it is a very tough one. I think you'd say most likely what it would do is rekindle the expectations that the Fed will take further action. That the QE3, the minutes from earlier this week, that there's probably an excessive reaction, and the QE3 is still an option if the economy slows. That's what they said in the minutes. If the economy slows, there's a chance of further action, and a weak payrolls number would be the economy slowing. So I think that would potentially weaken the US dollar and support the likes of Aussie and Euro and Kiwi into early next week.
Okay, Sean, thanks for your time this morning. Have a great Easter. Sean Callow there, senior currency strategist at Westpac Banking.